Hey guys, I think my trading was a lot better when I was recording my screen and kind of trying to talk things through for you guys. I think, if you watch some of my videos here lately, I ran into issues with Dash Trader Pro. It won't allow me to hide my account number. And so I've not been doing that, but I was just sitting here thinking about trading. And I think you may know, last couple weeks I've been down in Colombia, traveling from a couple different places. I made some videos for you guys, but I'm like, man, does anyone even want to see this if it's not actual trading? Um, so I didn't post them. But anyways, so all I think about is trading. Okay. That is it. I relate every single thing that I see to trading. If I see somebody buttering a piece of toast, I'm like, oh my God, that's the market makers. Every single thing in my life ties back to this. And so somebody messaged me, um, Alf Trader was messaging me today on Discord, and he was just asking me if I had a video about some of my basically like a lessons type video, which I don't have. I would highly, highly, highly recommend to you if you need a trading course to just buy the trading farmer day trading course. It is just great. That's just it. There's nothing more to say. If I had a course, I would still refer you to his course. Okay. That's just it. It's great. Relentless Trader has a course. I've not taken it, but he is just such an honest, noble guy. I think you might be able to learn a lot from him. It's just that I haven't taken his course. Um, but for what I can contribute in answering his question, this is what I'm thinking, right? I think that these are proper entries. So I want to buy if there's a 5 minute bottoming tail, that's for sure. And then for me, selling is always going to be the same. It's going to be to a predefined apex point, right? The last place where there was resistance on the chart. If I see a seller on level two, if I'm break even, right, meaning essentially the makers are chopping me out of this trade, or for a small loss. So that's always the same, no matter what the setup is. And then for a bottoming tail, because you have to understand it's likely at the end of something that's bearish. We want to start off with a starter and then add if we're green. That's what I'm thinking. The first 5 minute candle to make a new high. This is extremely bullish. I love this setup. So we're going full size right from the beginning. And then for me, I'm not waiting for the break. You know how Ross Cameron he sets his buy order above the high of the previous candle. For me, I'm anticipating the break. So buying either on the ask or a market order, which is almost very often on the ask, especially if it's a bullish move, right? Um, just anticipating what I see on level two. So this is like a A1 setup for me. A pullback to support on the front side. So if we were looking at a chart, let's say, you know what? Actually, let me just press pause and pull up a chart. Okay, so we've got three entries here. So we've got a pullback to support for on the front side, sideways, and then backside, right? Row 19, 20, and 21. So, not telling you anything that you don't know, but this is the front side, right? And so if we were to get a pullback to support, we would want to buy. Um, and obviously, what I was saying was on the front side, oh, come on, God, come on. So on the front side, I'm going full size and then I'm looking for a dip. I'm sorry, I wasn't looking for a pullback. Well, essentially, I am looking for a bit of a pullback, but it may not be to support, I guess. But essentially, a front side pullback, we're just looking for a quick dip, full size. And then sideways is when you're in a, oh, look at this. This is Farmer's class. He's got a great class. Sideways would be when you are um, in a consolidation zone like this, right? And so here you can clearly see we're consolidating. This is a double bottom, right? And so this is good. You can buy this. This is reasonable. And then the back side, uh, as you start to go back, you can't buy this double bottom here because you got to know you're on the back side of the move and that we're going to have a break of where we found support before. You just have, that's just something that you have to know. So here, this is to me small size, right? Buying buying a double bottom that's headed downward like this, small size, and that's just it. There is no adding. It's already a bearish move. Um, so let's go back. Okay, so those are those three. So what I'm noticing is that if it was that sideways consolidation trade, that's where we're looking for the rush of red, right? Because we already know where we're looking to buy. We already know that it should find support literally at a double bottom. So as you get the rush of red with short sellers pushing the stock back down to where it was before. If you buy on the rush of red, then you've increased your likelihood of getting a better fill, right? And not being immediately red the second that you get into the trade. And it's kind of nice because you can anticipate it because you know where it should be pulling back to. Um, Same thing with that backside support move, but it's just, again, small size rush of red. um, so I really love this trade right here on row 22, the break of descending resistance. That is a great, great trade to me, A1 setup for me. And then really, if you look at it, oftentimes it really is like the first 1 minute candle to make a new high. But ultimately, everybody that went short previously will ultimately need to cover. And so for me, this is full size and then anticipating the break of that descending resistance. The 1 minute candle to make a new high, I'm not the biggest fan of, even though I just 5 seconds ago said that this is ultimately what this is. But this depends upon where you are on the chart. You can have a 1 minute candle to make a new high and it's not necessarily breaking out of descending resistance, you know? So I think when you start to couple some of these situations together, that's when things become even more bullish. But anyways, first 1 minute candle to make a new high, to me, that small size, anticipating the break and just leaving it right there. I don't know that we have enough strength yet um, after being a bit bearish and then kind of starting to turn around. And then another entry is just seeing a big buyer on the bid, right? So we see a big buyer on the bid, we just press the buy button. We're not waiting for a pullback. We're not waiting for any other circumstance. Big buyer on the bid, press buy, small size. And then the momentum trade, but this is the trade that I usually take closer to 7 a.m., right? And so certainly need to start with the starter. Oftentimes the reason why this doesn't work out is because by the time I'm seeing it on the scanner, I'm a little late. So if I've anticipated this move at 7 based upon what happened after hours the night before, or between 4 a.m. and 7 a.m., we're good to go, right? Because I'm ready. But let's say that something just starts popping up out of the blue at 7:10. Oftentimes, I'm not going to see it on the scanner until maybe 7:12, and maybe I've missed the whole move. You know what I mean? And so because of that, those momentum trades, if it's that I'm seeing it hit the scanner, I don't know why it's hitting the scanner. I don't know if it has news. I don't know what it's done before. There's a lot of decisions that I have to make right there on the fly. So certainly need to start with the starter and then add to the trade if we're green. So that's what I'm thinking. I also was talking to a different trader who was kind of starting out and I was just saying, some advice, right? So he needed to establish edges, which is essentially trading and then monitoring your trading journaling your trading and then finding out which what works for you. For me, I think it's better to use edges that have been established by other people, right? And so, as opposed to having a bunch of data that you've derived for yourself, why not just find out what works through other people and save a bit of time? And then of those trades, figure out which ones are better for you. That's my thought. Anyway, I was telling him, he needs to start trading in the sun. That's like 100% for sure. Needs to load his trades into some type of a journaling software, record his trades, rewatch his trades. So of course, watch Tim and Farmer, and not really for, well, Farmer certainly for the way that he's trading, but a lot of it is just screen time. You need to see how market makers manipulate markets, how stocks move, what to anticipate, what you're looking for on the level two or on the time and sells, or between the spread, right? What's happening there, or the latter. So you just need as much screen time as you possibly can get. Certainly, I think starting off your trading with small share size gives you a huge advantage, so you don't end up spiraling down right away. And you can hopefully take the time to realize, wow, maybe today's not my day for trading, or things aren't going well, or make good decisions because you're not worried about how much money you're losing. Ending with small share size is good too, because then you're not like, oh my God, I was just up $5,000. Now I'm down 2,000 because you took giant share size, right? If you're up 5,000, you size down, you protect your profits, and then mentally you can see like, oh shoot, I'm only up 4,200. Maybe I should just call it, because you got there in a way that was slow and not fast. So I think that is a good rule to live by. For me, speaking out loud before each trade, like I was saying at the beginning of this video, helps me because it forces me to be checked into what I'm doing, as opposed to just over time you're just trading, you're just taking trades for the sake of trading. I was like, what entry even was this? I was watching a recording of mine from November 9th. I was trying to find something that I could upload for you guys that might be helpful. And I'm looking at my entries and I'm like, what am I doing? I don't even know what this trade is or what the thought was. You know what I mean? So speaking out loud, I think helps to say, okay, hey, here's my entry. Here's what I'm looking to get in. Here's where I'm going to get out. And then it just reinforces that behavior in your mind, right? Brings it into reality, in my opinion. Know what setup you're trading, which again, I just kind of went over a couple setups that I think are good. Know your profit target, which again for us is almost always the apex point, or for me. And then have a stop loss in mind, which, okay, is something happening on the level two? Are we being shook out the trade so we're not now back break even, or are we having to cut it for a small loss? But having that in your mind before you even get into the trade and being okay with it. You really have to be a good loser in this business. And I think it's probably the number one reason why so many traders don't do well. And then I guess I just needed to say small share size. I was looking at, like I said, my trades from November 9th. I'm taking 70,000 shares of something that was 50, 60 cents or so. Hold, oh my God, it wasn't good. But anyways, just small share size. You'd be amazed what you can do. And that's really more so for me. I was taking 12,000, 6,000, 8,000, and yeah, you can have some great days, but you also can have some really not so great red days. And then also just trying to trade mindfully. As I'm trading, I keep in mind how much I was up on the day at any given time. And some people keep this in their mind, like, oh, I was up 5,000, now I'm at 42. Like they can just keep that in their brain. But I've got like a little tracker and then consecutive losers, right? So you can kind of see, like, am I going down? Am I losing my edge? Am I not focused anymore? Am I just trading for the sake of trading? And then where I am on the day, right? P&L. And then what percent that is relative to how much I was up. And then, for me, my daily goal is 2,500. And I would love for my max loss to be 650. I have almost never in the history of the world stopped at 650. I probably have 3 trading days that were less than 650, but I can't even tell. I mean, I could pull them up, but it's just not real, you know? The reality is, on those days, all I was doing was focusing on cutting losers quickly. And in cutting losers quickly, I was kind of netting out about red $500, but there was no green in the days. It was only red. And so that just meant that I didn't have the proper entries in the first place, and that my focus was just one thing, cutting losers quick, and not, giving myself the best opportunity to actually have some winners. So for me, my red days are red. They are not good. And so this is something that I absolutely must change. My focus absolutely is risk management. And I'm so grateful for everybody over the Discord. Join the Discord, join us. Don't trade alone. Subscribe to the channel, like the video, give a comment, do everything. Just do every little thing in the book, okay? But at least do join the Discord. I've gotten so much help over there. It's so nice talking to other traders. And I feel so bad because I'm not adding value back to the trading community, at least before I was recording my trades and then uploading them, and there was something that I could share with you guys. But hopefully, just answering this one question from um, the one trader guy from the Discord. I feel so bad. His name is Alf Trader. My bad. So from Alf Trader here, maybe it's helpful. Maybe it's something that you weren't thinking of. More than anything, you gotta just be mindful while you're trading. Make sure you have a setup. Make sure you know where you're gonna get out of the trade before you even get in, and truly, obviously honoring a max loss. So you'll see when I do record my trades again. Like I said, I've been traveling. This week isn't going to be the best for me, and then next week I'm traveling too. So I'm thinking I probably will resume my trading here first week in April is what I'm thinking. And when I do, not swinging for the fences, truly just focusing on consistency, having a red day that is reasonable, and having metrics that show, hey, you can maintain consistent profitability following these things. Honestly, think about it. If we were to follow this on all of our trades, how could we lose, right? Think you got a proper entry. Now, don't get me wrong, it has to have volume, it has to have momentum, it has to be an obvious stock. There are other things that we need to consider, obviously, for these trades to work, especially like market makers, they're hidden sellers. There's a lot that we have to kind of jumble all at once, but just having the proper risk management is going to give me such an advantage. I hope this video helped you. I hope to connect with you, hear your story, hear how things are going. All right, talk to you guys later. Bye.